if you have been getting stopped out over and over, it's not because your strategy is bad. It's simply because you are using the wrong entry confirmation. And in this video, I am going to share one of the entry models I use that works, and it works perfectly if you follow what I'm about to show you. There are a lot of mistakes most traders make. They enter at the wrong key level. It might be because you're marking the wrong key level. It might be because you enter early. Either of these can be the reason why you are not getting the best entry confirmation. And with this market condition in 2026, you need to know how to trade with entry confirmation, because the market at times don't respect your points of interest. If you are trading SMC, CRT, support and resistance, I don't care the type of model you're using, but this entry confirmation works on all strategies, either support and resistance, Malaysian support and resistance, and the rest. This works on them. And with this entry confirmation, there are disadvantage and advantage trading entry confirmation, which I am going to be honest with you. Trading entry confirmation, you are going to experience missed trades. You are going to have missed trades. Why the advantage of trading entry confirmation is you are going to have a good win rate. Your win rate is going to be higher. If you are someone you trade profit, I would advise you most of your trade should be entry confirmation in this current price action. You can trade a setup by using setting limit, but if you are not sure about your setup, you can use entry confirmation. But if you have good setup, A+ setup, you can use entry confirmation. You can use limit, which at times Trump can just tweet anything and then your key level got disrespected. But to save yourself from unnecessary stop losses, you need to use entry confirmation. So let's dive in. Now, these are a lot of mistakes that some traders do make, most beginners do make. Have you seen whereby price would approach your key level? Let's say this is your key level. Price approach your key level, and you get an entry confirmation right here, and you feel like, no, this entry confirmation is valid. This is because you FOMO. You feel like price is going to leave you. You need to mark out your key levels. I don't know if it is demand zone. I don't know if it is support and resistance. I don't know if it is a A-shape key level. I don't care. But learn to be patient for price to come into your point of interest before you can react. Don't FOMO when you want to trade entry confirmation, because you can say you want to trade entry confirmation and you still lose the more because you don't pay attention to some keywords when you learn from your mentor. You can learn from your mentor and he put emphasis on something, but you don't pay attention to that. But that single thing can cost you a lot. That is why a lot of people go to mentorships and they come back and they still lose in the market, but others keep making money because they follow what their mentor taught. Now, whenever you have a point of interest, be patient enough for price to come into that point of interest before you can execute, because price will try to engineer liquidity around that point of interest, and when you enter, price would just take you out, give you the real point of interest. Now you don't have capital to execute. There is no capital to execute, but you have already blown your account trying to enter from point of interest on the lower time frame. If you have a point of interest on the higher time frame, wait for price to come into that point of interest before you can execute. These are some of the mistakes people do make. And another mistake is this. Imagine price tap into your point of interest and give you something like this, and you feel tap into your point of interest quite all right. You just feel like whenever price tap into your point of interest and give you a breakout structure, any form of breakout structure, it's valid for you. You need to have some set of rules you need to use that will guide you to confirm if this point of interest is valid, or if this change of character is valid. Imagine you're executing something like this. This is price engineering liquidity. Price will just come take out this high, maybe after taking out this high, then drop to the downside, and you feel like, are the big banks watching me? Why is it that whenever I enter, it takes me out before dropping? This is because you don't have a set of rules that you use before you execute. And I also see people making these mistakes. Price will tap into your key level, right? And engineer something like this, maybe consolidating, and do something like this. And you go in and you execute. This is price just engineering liquidity. Price is accumulating. And after it does that, you just need to wait for price to just take out that high, and you get a breakout structure. Like, I mean, do something like this. This is what I do. After price would maybe do something, price would just do something like this, then take out this high, make you feel like this zone is valid, try to sell a bit, then just take you out. Then after, once it breaks this structure, this is when I am going to enter this market. These are a lot of mistakes people do make. A lot of beginners. This is for my own take. This is what I have seen. And I am saying this from my own experience. I don't know if it works for others, but I have seen this fail multiple times. So I'll show you how to approach your entry confirmation the right way. I will start with entry confirmation type 1. Entry confirmation type 1 is you being patient to wait for price to come into your point of interest, and you wait for market to tap and break two structures. Whenever market takes out, tap into your key level, take out the previous high, breaking two structure, this makes it valid. That means the rules for this entry type 1 is market must break two structure for you to execute. I am giving you guys 3 entry confirmation you can use, and this works like magic. Wait for price to break two structures before you can execute. Go for 15 minutes time frame. If you want to trade this, go for 15 minutes time frame or the 30 minutes time frame. You can mark out your key level on the 4 hours time frame, on the 2 hours time frame, on the 1 hour time frame. I don't care if it's a demand zone, a supply zone, any type of points of interest. Some people do use fair value gap as a point of interest. Some people do use a previous daily high as a point of interest. Anything you feel works for you, just wait for these entry confirmation at those zones. The reason behind this entry, I will give you the logic behind this. This is what happened to avoid the reason I'm using this entry type 1 is to avoid unnecessary losses, to save yourself money for good setup. Have you ever seen yourself doing something like this? Let's say you have something here like a point of interest, a demand zone, a supply zone, and price moving into your point of interest like this, something like this, and price tap into your point of interest, and price break structure. You feel like, okay, now it's time to sell, and price does this. Have you ever seen this? This is because for a valid break of structure, you need to wait for market to break 2 swing lows to be confident enough to sell. You need to wait for price to break 2 swing lows for you to be confident enough to sell. This is because we trade liquidity. Most of the time, market will take out the previous low because this low was not protected. If this low is not protected, it's going to act as liquidity. Price is going to take out this low, tap into a demand zone right here or any points of interest and continue pushing to the upside. And you feel like you are following everything, but you are still failing. This is because you are trading this type of entry without any logic behind it. You are not trading with logic, you are just trading pattern. You need to understand the story behind that entry. At times you can trade this, but you need to have some set of rules that force you to trade this type of entry confirmation. And if you don't have those rules, you need to wait for price to break at least 2 structures before this point of interest to sell is going to be valid. Price needs to take out this swing high, taking out liquidity. Whenever price takes out a liquidity break structure, this is to tell you this high is protected. This is to tell you this high is protected. Then you can sell to the downside. Another way, which is also very, very good, is when you can see this same entry, right? Whenever you see price approaching your point of interest, price would need to, because they know a lot of people are waiting to enter from that zone. So they are trying their possible ways to take you out before price moving to your direction. They need liquidity before they can sell. So price would approach your point of interest, consolidate, right? This is accumulation. And a lot of people will feel like, okay, this is a break of structure, let's sell. These are people who don't have patience. They know a lot of traders, they FOMO. A lot of traders, they FOMO. And whenever price accumulate, does something like this, you are forcing yourself to enter. Price haven't tapped into your key level. And then when price does something like this, then price will just do something like this, and then boom, you have a break of structure. You can sell because price have taken enough liquidity. A lot of people entered around here. Price have taken a lot of liquidity and broke 2 structures, and you can execute because this low was protected. And you see, this low was protected. So if price can break this low, I'm telling you, if this is entry type 1, you can use this method, right? Then let me do this again for better understanding, right? Now, if price can approach your key level this way, price would accumulate, right? And price would do something like this and break structure. Whenever we have price accumulating, taking out the previous low and then distribute, this is to tell you this low is protected, right? And also this is, you know very well your direction is for sales. Price would make sure they manipulate before they can drop to the downside. So price will approach by giving you a protected low. Now, how many people are being manipulated right here? The first people who took this sell, market took out this previous high, broke structure, And people felt like, okay, this is the right time to sell. And when they want to sell, price will take out this previous low, broke structure. Those who trade lower time frame without a direction on the higher time frame, they will feel like, okay, this is the right time to buy. They will try to buy. How many people are being manipulated? We have the first and we have the second. They are going to be manipulated because those who trade protected lows without a logic. This is a protected low, but you are trading it the wrong way. And price will do this, price will just do something like this, tap into your point of interest, break structure. Now, this is a good entry for me. You are certain enough that, okay, this low have been broken and it's valid for me to sell this market. This and this goes together. This and this goes together. These two goes together. I call it my entry type 1. You must wait for these rules. Price approaching your key level by taking out the previous low, accumulating, taking the low, breaking structure. A lot of people feel like we should start buying because this low can be protected and price can do something like this, tap into this point of interest and buy to the upside. But for you to confirm this is valid is by waiting for price to close below this to make this valid. Now let's go to entry type 2. Now with the entry type 2, you are going to wait for this. Now this is when you can trade this. This is when you can trade this. Something like this. Market just breaking one single structure, right? Market just breaking one swing low. This is when you can trade this. And like I said, it has a role. You need to know the story behind this. Now, let's say this is your point of interest, right? And price tapping into your key level. You need to use the 4 hours time frame and the 1 hours time frame. Let's say this is the 4 hours time frame. If you can get a rejection on the 4 hours time frame, your entry needs to come from the 15 minutes time frame. If this is the 4 hours rejection, if 4 hours can reject a key level, you see a 4 hours candle rejecting like this and closing like this, you need to wait for the 4 hours candle to close. Set alert when all 4 hours candle close. When a 4 hours candle close, you look for this sort of entry confirmation. This must have a fair value gap after price reject and break. If you don't have a fair value gap here, don't execute this trade unless you have price engineer liquidity before you can execute. I repeat, if there is no liquidity after this rejection and a break of structure, if you have a fair value gap, execute. If you don't have a fair value gap, look for liquidity. If you have both at the same time, more advantage to you. This is entry type 2. Now let's go to entry type 3. This is entry type 3. How do you approach entry? If you have noticed, I trade story. I need to understand what is happening so that each time I see these things before I can execute. And I'll be honest with you, if no matter how good you are still going to experience losses. If you are a beginner and you are coming into forex trading, just know you are going to experience losses. But if you stick to this and you repeat this over time, you are going to be profitable. And let me just give you an example. Do you know if you can execute 10 trade and you lose 7 trade, do you know you can still be profitable if only you manage risks? If only you manage risks. Let's say you are going for 1:4 or 1:3. Let's say 1:4 because I always go for 1:4 trading my strategy. Now, if you lose 7 trade, that is -7. Now, if you are making 4% per trade and you win 3 out of 7, out of 10, you win 3 and you lose 7. Do you know you are still profitable? You are still up. Now, take 4% times 3 wins. How much is that? That is 12%, whooping 12%. Now, minus the 7%, how much are you left with? Imagine you trading a $10,000 account. How much can you make from that? It's possible with trading, but a lot of you just trade blindly. You just trade randomly. You wake up today, risk 2%, the next day risk 3%. There are some traders who risk 5% per trade. I am giving you the psychology part and the technicals to combine this together because these intertwine together. They move together. You can't do without one of them because if you miss one, you are going to lose. That is why I am emphasizing on these two things. Now let's go to the next one, which is the number 3, which is the CRT. I also use CRT for entry, right? For every valid key levels, be it the daily key level, be it the 4 hours key level, you need to wait for a CRT at your point of interest because CRT always signify reversal. CRT always signifies reversal. When price tap into your points of interest, all you need to do is price taking out these previous candle, rejecting back inside and closing like this. If this can close on the 4 hours time frame, all you need to do is go to the 4 hour to the 15 minutes time frame. If you can find this on the 4 hours time frame, you need to go to the 15 minutes time frame to get your entry. On the 15 minutes time frame, you need to see market taking out this sweep of liquidity, break of structure, price engineering liquidity, then good, you can execute. And if there is no liquidity, look for a fair value gap. If there is no liquidity, look for a fair value gap or wait for price to engineer liquidity and then boom, you sell to the downside. These rules would help you. Like I said, wait for a sweep of liquidity, a break of structure, and look for a first pullback or engineer liquidity and you execute. And if there is no liquidity, but you have a fair value gap, then you can execute. Fair value gap works like magic. This is to tell you a reversal is coming. The big bands are active. The big bands are ready. Push price to that intended direction. And before I continue, guys, like this video, share, and subscribe to my channel. So these are the set of rules I use when it comes to entry confirmation. Now let's do some examples on the trades I took. There are some few trades which I did analyze this week, and I am going to be honest with you, I'm going to show you everything, all the trades I took, the losses, miss entries. I would show you how possible it is. Now this is a trade which was a miss trade, and this is a trade which was a winning trade, and I am going to show you how I got this trade. Now look at this. This was a point of interest and we're bullish. I knew very well. That is why I said you must understand what is happening on the higher time frame. If you don't have a bias strategy, make sure you watch my video to know how to get bias. Watch my videos on bias. If you don't have a bias, don't try to trade this randomly because you will lose. You will lose. This bias was very, very accurate for me because all these sales I took was a pullback, which I know when to trade the pullback. When you understand bias, you know when to trade the pullback. I know when to follow price in that intended direction. This was a sip of liquidity. After getting my bias on the higher time frame, I saw that okay, this low is protected on the 4 hours time frame, and we have this liquidity and we have this fair value gap. Price is fractal. Like I said, when price displays, take out liquidity, break structure, leaving back a fair value gap, this is to tell you that the big banks are ready to push price to that direction. After seeing this fair value gap, I had this point of interest right here. I was waiting for price to reject from any key level. If price can reject from any key level below this or inside this fair value gap, because this was a liquidity, all I need to see is if I have a rejection on the 4 hours time frame, my entry should come from the 15 minute. We took out this previous low and we also rejected from this key level. So I need to use the 15 minute, not I need to use the 15 minute, not the 5 minute. You can only use 5 minutes if you have a CRT on the 1 hour or rejection on the 1 hour. That is when you can use the 5 minute. If only you have rejection on the 1 hour or CRT on the 1 hour. So after seeing this rejection, I went to the 15 minutes time frame. I had a sweep of liquidity, and a break of structure, leaving back a fair value gap, this breakout block, this liquidity, and a fair value gap right here. So I was trying to enter from here because this is a breakout block. If you don't understand anything, breakout block, watch my videos on entry. Now, I was trying to enter from here, but price did not tap me in. That is why I said with confirmation entry, you are going to miss entries a lot. Now let's go to another example. This was a sell and I was trading a pullback. So all I needed to do is, okay, we had a break of structure. I'm just waiting for price to reject and give me any of the rules I set for myself. Price tap into that point of interest, gave me a CRT. You see how price approached this point of interest, gave me a CRT, and I need to go to the 15 minute because I have this candle on the 4 hours time frame. So the 15 minutes time frame is going to make sense. Can you see? We had a sweep of liquidity. We have price breaking two structures. This is structure 1, structure 2. And also we have liquidity and we have fair value gap. This was an A+ setup. Like everything was available. Everything. Structure, entry type 1 was there. Entry type 2 was there. Entry type 3 was there. Everything was there. This made it a high probability trade. That is why I sold to the downside because I was trading pullback. That is why I had to sell to the downside. Now let me see if I can still have another example to give you guys. I don't want to make this video very long. I don't want to. Okay. Yeah. This is a rejection. Can you see? Price is fractal. Whenever price wants to reverse, price would displace to the downside and leave a fair value gap. Now, this is another point of interest and it has a fair value gap, which some people use as a point of interest, but me, I was using this OCL. If I'm the one, I'll use this OCL. This is an entry confirmation, but I did not take this trade. I just want to analyze with you guys. Now, this is a point of interest rejected. Can you see this candle rejected at this point of interest? For me to confirm this, I need to go to the 15 minutes time frame. Now, can you see on the 15 minutes time frame what happened? We took out this previous high and we closed below. I use body to body break. I don't go for the wicks. I use body to body breaks. Now, imagine you marking this. You are going to miss this entry because you'll be marking this guy as a liquidity and price will not even come. So You see, we took out this high, we broke structure to the downside. You see, we rejected, failed, and rejected after price closed below with volume, giving backward a fair value gap. No need for liquidity. You don't need liquidity to execute this. This is another example. You don't need liquidity because price displays to the downside, leaving back a fair value gap. There is no liquidity. You don't need liquidity for this type of entry. And all you can do is sell to the downside. This is another example. And then see, price push to the downside. And let me look for the one that failed. Let me see if I can. I think yeah, there's a trade I took which was a loss. I think so. Was it this? No, what this played out. This one played out. This one played out. Yeah, this one played out. I was waiting for entry confirmation, but since price did not give me an entry confirmation, I did not execute this one. You see, I was waiting for price to come into this point of interest, and then price took out this high, tap into this point of interest, rejected. And then on the 1 hour time frame, we also rejected from the 1 hour time frame. Can you see? We had a CRT on the 1 hour time frame. We had a CRT on the 1 hour time frame. Can you see a CRT on the 1 hour time frame? Now moving to the 5 minute because this happened on the 1 hour time frame. Let me see what happened. Can you see? This entry is magic. I see price took out this high, then broke structure. I go forward, body to body break, and price did what? Price left back a fair value gap. When you have a fair value gap, you don't need any liquidity, but price did engineer liquidity, and boom, price dropped to the downside. Can you see? This is another entry, but I did not take this same trade. I'm just trying to give you guys my example. And what I did was I was waiting for the continuation to the downside, but I did not see some sort of confirmation. Can you see what I said? Some people do trade this. Market will approach a point of interest and price will do this. Can you see price creating equal highs and break structure, and you want to sell to the downside? This price just gave equal highs, and you try to execute, price will just come and take you out. Use you as liquidity. Okay. I want to look for the one that I took a loss on. So I want to show you guys the reality of Forex. I think it was not this. I was waiting for this one. We pull back, but you see, I waited. That's the advantage of entry confirmation. This one I was looking for entry confirmation, but there was no rejection. So I did not execute because there was no rejection around here. When I look at the 4 hours time frame, let me show you guys here. You can see this was the 4 hours point of interest. Can you see price closed above, which means this point of interest was invalid for me to execute from. You see, that's the advantage of waiting for entry confirmation. I can't find this. Okay, yeah, this is it. This is the trade. Exactly. I took a lot. Was it this trade? Let me see. Just hold on. Okay. This is not GBP USD. I'm looking. I don't trade this pair. Trade this pair always. My favorite pair. I hardly trade this, just once in a while. Hey, I wonder. Yeah, this is a trade. I took a loss on this trade. And now, this is what happened. I was waiting for a rejection. I marked out my point of interest, and I was just waiting for price to give me that entry confirmation, right? And this key level was 1, and this was my second key level. And price tapped into my points of interest. You see, give me a CRT. After price gave me a CRT, you see, it broke structure to the upside. Can you see? It broke structure to the upside, giving me some sort of liquidity, and I entered from here. Price took me out and finally moved to my direction. After rejecting on the 4 hours time frame, it gave another entry, but I did not execute. You see, price gave another CRT right here. Price tapped into this point of interest, took out this low, gave another CRT, took out this swing low also, and rejected back inside. And if you go to the 1 hour, we also had an entry on the 1 hours time frame. You can see here, but I did not execute this. You see, price took out this low and rejected from this point of interest. Let me select this so I can see. You see, price tap here, took out this low, and if you go to the 5 minute, because this is the 1 hour CRT, if you go to the 5 minute, you are going to find something interesting. I'm very, very certain. Can you see? This is very, very accurate. You see, price did what? Price displays to the downside, changing the state of delivery, and left fair value gap, left back a fair value gap after price tapped into that fair value gap, taking out this liquidity, and then continue to the upside. And also, what did we have? Price broke structure 1, broke structure 2, and boom, you have the confidence to execute. So guys, if you love this video, please like, share, and follow me for more information like this, and I would always deliver. Just ask your question. If you want to know more about this entry, ask your question and I am going to make a video on that. And also I would look for a day and do examples on this. So if you love this video, like,